Committee will come to order. Today we will consider the nomination of Mike Faulkender to be Deputy Secretary of the Treasury. Mr. Faulkender, congratulations on your well-deserved nomination, and thank you for your willingness to serve in this important position. The U.S. Treasury Department is responsible for overseeing several issues of importance to the United States economy. This includes economic policy and financial markets, managing the U.S. government's finances and debt, the Social Security and Medicare trust funds, and financial sanctions, to name just a few. The Deputy Treasury Secretary plays a primary role in the formulation and execution of Treasury policies and programs in aspects of every part of the department's activities. Along with Secretary Bessent, Deputy Secretary will be thoroughly involved in Congress's efforts to craft pro-growth tax policies that will benefit all Americans and allow U.S. businesses to compete on the global stage. If confirmed, I look forward to working with you to achieve these goals. Mr. Faulkender previously served as the Assistant Secretary for Economic Policy at the Treasury Department during the first Trump administration. During that time, he played a key role in important policy discussions like the CARES Act, among other critical initiatives. For his devoted service, he was awarded the Alexander Hamilton Award for Distinguished Leadership, the highest service award granted at Treasury. As a university professor and leading economist, Mr. Faulkender's work has focused on an array of topics relevant to the position for which he has been nominated, including investment considerations for multinational corporations, the corporate capital structure, risk management, corporate liquidity, and executive compensation. Mr. Faulkender, I have reviewed your background and responses to all of the questions we've posed to you during your rigorous review process. Based upon your public and private sector experience, academic credentials, and areas of focus and training, you are highly qualified to serve as Deputy Secretary of the Treasury in this administration. As ranking member for the last 4 years, I've both supported and opposed nominees put forth by the Biden administration, but I have never objected to a nomination hearing. The Finance Committee has an arduous nomination process, and once the nominee completes all the steps, he or she deserves a public hearing followed by a vote. I thank Mr. Faulkender for his cooperation and responsiveness during this exacting process. He has met with members of staff of this committee, has gone through our rigorous review, and has been open in answering all of our questions. My colleagues have sent several letters requesting information on Department of Government Efficiency related work at Treasury and the IRS, and it is important that Treasury and the IRS be transparent about their actions. To date, meaningful information has been provided on both topics, and I expect this will continue. For example, on February 4th, 2025, Treasury provided a letter outlining the review and access of Treasury's IT infrastructure and payment systems, including Mr. Krause's role. On February 12, Treasury provided a follow-up letter attaching detailed witness declarations of the 4 Treasury employees that are involved in pending legal cases related to the administration's government efficiency initiatives. On February 26, Treasury provided the Memorandum of Agreement between OPM and IRS for an OPM detailee to the IRS. During the committee due diligence meetings, Mr. Faulkender stated that if he was confirmed, he would ensure the requested briefing would be provided to Congress on the Treasury payment systems, as well as be responsive to all questions put forward by members of Congress, including this committee. As a reminder, I and other Republicans sent several letters to the Treasury and the IRS during the Biden administration with questions on numerous issues, including the organization of the Economic Cooperative and Development, safeguarding taxpayer information, the American Rescue Plan, and reducing return inventory tax during the season, to name a few. Many times, I did not receive a response for months. Mr. Faulkender, I appreciate your commitment to respond to members of this committee, including as a part of this hearing. Congratulations again on your nomination, and I look forward to working with you. I now recognize Ranking Member Wyden for his opening remarks.
Thank you very much, Mr. Chairman. Mr. Chairman and colleagues, this is no typical nomination hearing for the Finance Committee. It is our understanding that Mr. Faulkender has been at the Treasury Department since day one of this Trump term, essentially performing the Deputy Secretary role in an unofficial capacity. He is in the building. Together with Secretary Bessent, he's got his hands on the economic levers. So I'm going to begin by taking stock of how the Trump administration's economic policy is performing to date. Inflation expectations climbing ominously. Consumer confidence, the worst it's been since the thick of the pandemic. First quarter GDP forecast tumbling from a projection of 4% growth to a 2.8% contraction. Unemployment numbers starting to climb. Stock markets, scary. Housing starts sinking into the basement. And a host of leading economic experts and business leaders are sounding the alarm over the damage Trump's tariffs are going to do to our economy as families and businesses get walloped with price as the crash test dummies. Between all of that and what Elon Musk and his band of unaccountable, unvetted staffers are committing all around the federal government, it sure looks to me that the prospects for recovery in the near term are slim. Late last night, the Treasury Department responded to a list of my oversight questions with answers that mostly ducked and dodged and avoided giving real information. But they did finally confirm, colleagues, that DOGE personnel infiltrated the Treasury Department payment systems with the intent to cut off U.S. aid payments authorized by the Congress. As DOGE has grabbed hold of key systems in the Treasury Department and IRS, there's also a real danger they're going to break them. The most intimate data belonging to Americans and businesses in this country may be exposed if it hasn't been already. I have real questions about whether taxpayer privacy laws have already been violated, with Treasury Trump officials now covering up. So I want to say, Mr. Chairman, I believe the Finance Committee needs to have a Senate hearing to look into these privacy issues. And when I say privacy, I mean the security of your family and your finances. Musk personnel reportedly wanted a get-out-of-jail-free card, giving them access to sensitive taxpayer data they can weaponize all over the government, targeting people and communities Mr. Musk and Donald Trump disapprove of. Now, the Trump administration has already announced sweeping layoffs at the IRS. These layoffs are curtailing or even shutting down efforts to go after tax cheating involving private jets, huge profitable partnerships organized solely for the purpose of dodging taxes, and high net worth individuals who've gone years without even bothering to file taxes. Earlier this week, there was a report that the Trump administration is seeking even more layoffs, a cut of up to 50%. That would be a nightmare for working people who follow the law, because taxpayer service would crumble and nobody could get their refunds on time. But it'd be Christmas morning for the ultra-wealthy tax cheat, who'd never have to worry about getting caught even if they didn't pay a penny. Trump officials try to defend this recklessness by claiming they're making things more efficient and they'll replace manpower with machinery. The reality is, cutting IRS enforcement funding lets a whole bunch of rich crooks off the hook. It doesn't save money, it increases the deficit. And you don't make progress updating IT systems at the IRS by firing a bunch of the people tasked with improving them. In the last few weeks, the Treasury Department's made a mockery of checks and balances and has basically ignored our oversight. Mr. Faulkender has been around for this chaos. So today's hearing, in effect, becomes as much about oversight as it does the Faulkender nomination. This may be the only opportunity in the near future where the committee is going to be able to hear directly from a Trump official on the harm the administration's economic policy and Mr. Musk's illegal power grab are causing. One last point. As Americans see the chaos unfolding around them, as they wince while looking at their bills climbing and retirement accounts shrinking, people are wondering whether this is incompetence or malice on the part of Elon Musk and the Trump administration. My view is it may be both, but I think hardworking Americans deserve better. I look forward to this hearing, and certainly Mr. Faulkender, as we talked about in the office, my colleagues have a lot of challenging questions this morning. Thank you, Mr. Chairman.
Thank you, Senator Wyden. In a moment, Mr. Faulkender will share his opening statement, but before that, I have 4 obligatory questions that we ask all nominees before this committee. Mr. Faulkender, first, is there anything that you are aware of in your background that might present a conflict of interest with the duties of the office to which you have been nominated?
No.
Do you know of any reason, personal or otherwise, that would in any way prevent you from fully and honorably discharging the responsibilities of the office to which you've been nominated?
No.
Do you agree without reservation to respond to any reasonable summons to appear and testify before any duly constituted committee of the Congress if you are confirmed?
Yes.
And finally, do you commit to providing a prompt response in writing to any question addressed to you by any senator of this committee?
Yes.
Thank you, Mr. Faulkender, and you can proceed now with your opening statement.
Thank you, Mr. Chairman. Chairman Crapo, Ranking Member Wyden, distinguished members of the committee, I'm honored to be with you as the nominee for Deputy Secretary of the Department of Treasury. I am grateful to President Trump and Secretary Bessent for this extraordinary opportunity to serve our country and for placing their faith in me. I'd like to take a moment to recognize my 2 daughters who are here with me today, Lauren and Catherine. They have been my biggest supporters, and there is no question that I would not be before you today without their love and encouragement. I would also like to thank my family watching this online and my colleagues in academia, especially at the University of Maryland, who have supported my scholarship and professional development for over 2 decades. 4 days after the attacks on September 11th, 2001, I was in Washington, D.C. for the very first time. I found myself standing in front of the Treasury building and will never forget the patriotism and potential of our nation that I felt on that day. In President Trump's first term, I had the honor of serving in that very building as the Assistant Secretary for Economic Policy. In that role, I advised the Secretary on all domestic and international matters that impacted the economy. During the COVID-19 pandemic, I assisted in the negotiation of the CARES Act and was the senior Treasury official that led the implementation of the Paycheck Protection Program. As Secretary Bessent said at his confirmation hearing, when the world is in trouble, they look to 1500 Pennsylvania Avenue. I have the deepest respect and appreciation for the dedication of the career staff in the department. Their work is critical to providing a best-in-class service to the American people and ensuring the implementation of the President's agenda. If confirmed, I look forward to working closely with them and all of President Trump's appointees to advance an America First economic agenda. From 2017 to 2019, the U.S. built a thriving economy that was a model for the rest of the world. We implemented pro-growth policies through tax reform, streamlined regulations, and critical investments across our nation. We realized energy independence for the first time in 70 years and commenced a much-needed rebalancing of our relationship with China. The result was an economic revival in traditionally underserved communities that generated shared prosperity, with the lowest income deciles seeing large increases in real wages and record low poverty levels. Our nation's economy experienced unprecedented growth, and many American communities who were the most in need benefited. A return to that economy is the baseline for this administration, not simply the goal. Right now, America has an affordability crisis. Inflation remains persistent, mortgage rates and the cost of housing are too high, food prices have not returned to their pre-pandemic levels, families are paying more than ever before, and our underserved communities feel forgotten again. We must redouble our efforts to rebuild America by promoting policies that support and benefit all Americans. Improved affordability comes from generating abundance and embracing innovation. Last year, I heard from some in the technology sector that Europe had recently been a more conducive environment for innovation than the United States. That stops now. We have the best workers in the world, and we must recommit ourselves to being the best place in the world to start new businesses, build new factories, and research groundbreaking new technologies. By reprivatizing the economy, shrinking the regulatory overreach coming from big government socialism, slashing the inflationary spending, making pro-growth tax reform permanent, and rebalancing our trade arrangements, we will realize the golden age that the President has promised. At the same time, the Treasury Department is tip of the spear in addressing some of our world's most pressing national security challenges. During President Trump's first term, sanctions against Iran nearly bankrupted that country's government and stripped away its ability to fund terrorism in the Middle East. If confirmed, I will work tirelessly to see us return to maximum pressure. And we must strengthen those same tools to go after the cartels that are poisoning our children with fentanyl, profiting off the smuggling of people into our country, and causing the rampant crime that has turned every state into a border state. Under the leadership of President Trump and Secretary Bessent, I'm excited for the opportunity to work with the members of this committee to advance pro-growth economic policies and targeted national security strategies that will greatly benefit the American people. It is a great privilege to appear before you today, and I look forward to taking your questions.
Thank you, Mr. Faulkender. I'm sure you've noticed that in the daily news that President Trump's efforts to improve efficiency of the federal government and to get rid of waste, fraud, and abuse. Though I understand you've had a very limited role currently in advising Secretary Bessent on these issues, I'd like to give you an opportunity to provide your perspective on these efforts. For example, what is your understanding of the focus of the President's efforts? How does one ensure that taxpayer money is well spent? And based on your understanding of current and planned initiatives at Treasury and the IRS, are all necessary and customary safeguards in place to protect the integrity of Treasury's payment systems and processes, as well as personally identifiable information?
Thank you, Mr. Chairman. As you noted, I'm currently serving as a counselor to the Secretary. In that role, I do not have any administrative or budgetary authority. I merely advise the Secretary on policies he may implement. As part of preparing for today, I have been briefed on some of the activities that we are engaged in at both the Bureau of Fiscal Service and at the IRS. And it's my understanding that the objective is to improve the effectiveness of those systems and provide modern levels of customer service, privacy, and collections at the IRS, as the Secretary has promised. When it comes to the Bureau of Fiscal Service, the GAO has reported that a number of departments and agencies in the federal government fail their audits for lack of controls. And so my understanding of what is occurring at the Bureau of Fiscal Service is that they are working to increase the required information that is provided when a department or agency submits a payment file for processing by Treasury. In the past, various fields were allowed to remain vacant or incomplete, and what some of the changes are is to require, for instance, that every payment have the account symbol corresponding to the payment that's being made. The purpose of this is to help departments and agencies better understand how money is being spent and be more accountable to Congress and to the American people for those funds.
Thank you. There's a broad agreement that despite decades of effort and billions of dollars in funding of IRS IT systems, that they fall far short of what taxpayers deserve. Mismanagement and poor planning have significantly contributed to the IRS's IT problems. For example, in January of this year, the GAO highlighted how most IRS modernization plans dealing with its archaic systems have failed to include this, a key component that you've talked about, a plan for actually retiring the outdated system. This echoes similar concerns that my colleagues and I have voiced over the years, that we have an insufficient IRS strategic operating plan. Meanwhile, despite well-intentioned efforts, the IRS's ability to serve taxpayers has barely budged. This is despite all those billions in additional funding provided in the Democrats' recent partisan reconciliation bill, most of which went to inefficiently supersizing IRS enforcement. I understand that President and Secretary Besant are interested in taking a different approach at the IRS, both by trimming waste and also planning for and investing in real technological change. I understand that all evaluation and modernization work will be undertaken using usual and customary safeguards, including not exposing any taxpayer's personally identifiable information. And I also understand Secretary Besant is fully committed to ensuring that the tax filing season will not be disrupted by these processes. Can you confirm my understanding and provide any additional detail about efficiency and modernization at the IRS?
Yes, Mr. Chairman. The Secretary's objective is to ensure that the American people realize a 2025 experience when they interact with the IRS. And he has prioritized collection, customer service, and privacy. And the challenge that we have is that both Democrat and Republican administrations have recognized that the IRS is built on top, the technology at the IRS is built on top of 1960s systems. In fact, when I met with the Deputy Secretary who served during the Biden administration, one of the main items he discussed with me was the need to address IRS modernization. What we're doing is asking for a review of what systems are being built at the IRS. We have people who have worked with financial institutions and technology companies who understand how to build modern systems architecture, and it makes sense to have them come in and look at the contracts that have been signed for part of this modernization to ensure that the right systems, the right system architecture is being created to provide that level of 2025 service to the American people.
Thank you. Senator Wyden.
Thank you very much, Mr. Chairman. Mr. Faulkender, as I noted in my opening statement last night in response to questions I asked a month ago, the Trump administration admitted that DOGE infiltrated the Treasury payment system to stop congressionally authorized USAID payments. In my view, this stomps all over the Congress's Article I power of the purse. So my question is, in your view, does the President of the United States have the power to impound funds?
Thank you, Senator. I enjoyed meeting with you in your office earlier this week. My understanding of what Treasury's responsibility is to process the payments. And if a payment file comes over from an authorized department or agency, the Treasury Bureau of Fiscal Services processes that payment. And so that has been Treasury's role.
That's not my question. Does the President of the United States have the power to impound funds? That's yes or no?
Senator, I'm not a lawyer on this. I do not know the legal authority of the President when it comes to impoundment.
Well, I will tell you, what I have seen is basically throwing the checks and balances, which make our special system so unique that the department is just throwing them in the garbage can. And I also asked Treasury whether Elon Musk had ever gained access to the Treasury payment system data. Treasury answered, and I quote here, "To the best of our knowledge, no." Sure seems to me that the American people deserve a yes or no answer to that. I'm going to move on because we have more to do, but certainly if you want to respond to some of my colleagues, we can do that that way as well. Now, 7,000 IRS employees have already been fired. Around 1,000 of those employees are veterans, so they have been hammered twice over. You are already in the building as Secretary Besant's lieutenant. Is there any validity to these reports that the administration is looking to cut the IRS workforce by half?
Senator, I'm not aware of a plan, nor have I been briefed on any plan to cut the number of employees at the IRS by half. I'm familiar with the layoffs that have occurred so far, but I have not been briefed on any plan to go any farther than that.
In your view, would it be a mistake to cut the IRS workforce by half? Would we be hampered in terms of service and getting refunds and that kind of thing? What would be the implications? In your view, you were there for Trump 1. So you know a lot about this department, and that's something we talked about. Would it be injurious to the country to cut the IRS workforce by a half?
Senator, in my first time of service at the Treasury, I did not have a role in working with the IRS. As part of coming in, we have asked for a full evaluation of the efficiencies and the systems at the IRS so that we can make informed decisions as to the personnel levels that will be required.
That answer suggests to me that you're leaving open the option to do it. I think that's a mistake. I think you ought to be taking it off the table. I think I have time for one other area that you and I talked about, and that's the question of criminal investigation employees. The IRS Criminal Investigation Division has got about 2,300 field agents who are the best in the business at following the money to take down drug cartels, money launderers, cryptocurrency scams, and sanction evaders. Now, the administration has said going after these criminals is a priority. Instead, it appears that highly trained accountants are being paid to stand by the border to deport families instead of doing complex financial investigations that they're uniquely trained to do. Do you believe that taking IRS criminal agents away from sophisticated investigations into cartels and fentanyl trafficking is going to harm national security or public safety?
Senator, as we discussed in your office, the criminal investigators at the IRS play a critical role in investigating things like fentanyl trafficking and some of the drug activity that takes place. It's my understanding that we are working with DHS to form task forces to take on the cartels and the illegal immigration that's occurred and the effects that it's having in all 50 states.
One last question, if I might. You and I talked about the clean energy tax credits. They were written in this committee. They constitute the biggest investment in fighting climate change in American history. What is your position on this? Because you and I talked generally about this. I think it would be a great mistake, and the communities that would be hit the most are ones in pretty conservative areas that have seen economic rejuvenation as a result. What's your position on the clean energy tax credits?
Senator, I very much enjoyed that conversation we had. As we discussed, I support an all of the above energy strategy. If the economics of a particular geography are such that wind or solar are the optimal power source for that area, that's fine. I just think that we should take the same approach and not put a thumb on the scale when it comes to the source of energy that any particular locality chooses to power itself with.
The law specifically stipulates technological neutrality. So nobody's putting their thumb on the scale. And basically what we're saying is, let's give science a chance to come up with new approaches, and that's why we have technological neutrality. I hope that you'll look at it again, and we would very much appreciate a written answer indicating that you're supportive. Thank you, Mr. Chairman.
Thank you. Senator Grassley.
Yeah, I start with a letter that I sent to Secretary Benson maybe a couple weeks ago when I still don't have an answer. I ask you this subject to let the administration know that I'm very serious about how we respond to ill-treated whistleblowers. IRS Supervisor Special Agent Gary Shapley and IRS Special Agent Joseph Ziegler made lawful disclosures about the IRS playing politics in the Hunter Biden tax case. After bravely sticking their necks out at the Justice Department direction, the IRS removed them and their team from the Biden investigation. I've been told that senior IRS management who rolled over for the Department of Justice are still in charge. I've also been told that they haven't stopped retaliating against Shapley and Ziegler. And the background of this is that I'm kind of tired of trying to, after 6 weeks of new administration, getting whistleblowers back to the jobs that they were unjustly relieved from or hurt as a result of. And in this particular case, they're on the payroll, but I think that if you looked at what they're doing, what their jobs are, it's tantamount to a demotion. So I have this question. You'd agree with me that retaliation is a violation of federal law and has no place in government. I think you'd say yes to that.
Yes.
Yeah. And so then, if confirmed, give me concrete steps that you would take to put an end to this retaliation on day one that you're in. But what I'm hoping in answering that question is to make it very simple. It'll probably be a couple weeks yet before your votes before the United States Senate. In fact, it's probably next week before there'll be a vote in this committee. Nothing against you, because you're qualified for this job, and I want you to be in the job, and you should be serving the taxpayers as a deputy. But the point is that we shouldn't have to wait for you to get to this job to get justice for these people. So if, in case it isn't done on day one, what would you do?
Senator, thank you for the letter you've sent to us outlining your concerns. I know that our staff is speaking with your staff, so that, and I assure you that we will continue to collaborate. If confirmed, I will work to make sure that this situation is addressed, and I want you to know that we will have strong whistleblower protections if I am confirmed as Deputy Secretary.
I know that's a sincere answer. I just can't believe that when people were doing a good job for decades working for the IRS, and they were well qualified and got good reports, that it's, you got to work with us to get something worked out, just to get people back to what they were doing before they became whistleblowers. It just doesn't make sense. Let me go on. I don't think you can do much more there. And now, getting back to what Senator Wyden said about more employees, I don't want to get on that subject, but there's a tool that I got passed in 2005 or 6 for whistleblowers to report taxes that aren't paid. That has brought $6 billion back into the federal treasury, and I don't think that $6 billion back into the federal treasury since then, and I don't think that IRS is using the job as effectively as they should. I hope you'll review it, make full use of it, and don't leave a bunch of whistleblowers out there that are saying the government isn't collecting taxes and having them wonder, in some cases, for 10 years, how's the IRS handling the information they gave them. So can I count on you to be supportive of the whistleblower program and work to make sure that it's used to its fullest potential?
Senator, I'm still learning about this program, but I assure you that I will learn more about it and work with you to make sure that we get the maximum benefit out of this program.
Yeah. Mr. Faulkner, Iran is the world's largest state sponsor of terrorism. The Biden administration has transferred $6 billion in frozen Iranian funds just weeks before Hamas's October 7th attack on Israel. If confirmed, how do you plan to tackle the Iranian threat from your position as Deputy Secretary of Treasury?
Thank you, Senator. President Trump has already called upon Treasury to re-implement the maximum pressure campaign against Iran, and so the team at Treasury continues to look at new targets for us to provide sanctions against, and we're looking to return to the reduction in export activity that Iran had during the Trump administration in order to remove Iran's ability to fund terrorist activities.
Senator Bennett.
Thank you, Mr. Chairman. I appreciate it. Mr. Faulkender, thank you for being here, and thanks for our meeting, I think, earlier this week. I know the deficit is a concern of yours, as it is of mine. Can you tell us when the last time this government had a surplus was?
If memory serves, I think it was right around the turn of the millennium.
Do you know who was president when we last had a surplus?
My recollection is that it was Bill Clinton.
It was President Clinton. Do you recall what percentage of GDP we were collecting as revenue versus what we were spending as a government?
Those particular years, I believe we were in the 18 to 19%
I would
range.
agree with that. And just to make it easy for people, if there is anybody out there online, your relatives watching it, just to make it easy, those revenue and costs lined up as a percentage of our overall economy, and that meant that we had a surplus. And we haven't had a surplus since. Would you agree that that's true?
Yes, we have not had a surplus since 2000,
And
2001.
would you agree that every year during the last Trump administration, this is an unusual situation because we almost never have a president who was president, then there's an interruption, and then a president comes back, that the last year there was a Trump administration that every year the deficit of the United States went up?
My recollection is that we ran deficits each of those years. I don't remember if they grew every year.
They grew every year. I appreciate your candor. And that was after people sat in that chair, just like you, and said that they were going to enact what they called pro-growth tax policy, or tax reform, I think is how you put it, pro-growth tax reform, which I think is code for cutting taxes for the wealthiest people in the country, because if you look at the distribution tables, that's what it is. But pro-growth tax policy, and the argument was, always is, that it would pay for itself. Do you agree that that was the argument that you made, that your administration made when Donald Trump was president the last time?
Senator, if you look at the revenue numbers that have come in, they exceed the forecast.
Do you agree that the argument was that it would pay for itself the last time that you and the others were here?
My recollection is that some people made the argument that it would pay
They
for
did.
itself.
Certainly, the Treasury Secretary did, and we heard that again from Mr. Bessent when he was here. We actually heard him say that he was going to solve this problem, Mr. Chairman, when he was here, by cutting discretionary spending, that he was going to deal with what is now a deficit that is 6% of our GDP by cutting discretionary spending. We heard the president say the other night that he was never going to touch Medicare. He was never going to touch Medicaid, that he was going to ram his tax cuts through for everybody, he said, in America. America should know, though, by the way, that the last time he did this, 55% of the benefit went to the top 5% of Americans, that it turned out that the Congressional Budget Office was correct when it said that it would blow a $2 trillion hole in our deficit. So in my mind, it's no different than, and I've said this before here, I won't belabor it, it's no different than any mayor of any city in America saying we're going to go out and borrow more money than we've ever borrowed before in the history of my town. And I would say, well, that makes me nervous. What are you going to spend that on, Mayor of Grand Junction or Mayor of Lyman or Mayor of Denver? These are red and blue parts of my state. Are you going to spend that money on schools? No. Or on mental health? No. On parks or public spaces? No. On affordability? No. What are you going to spend it on? We're going to give it to the 2 richest neighborhoods in the community and hope that it will trickle down to everybody else. There's a reason why no mayor in America has ever done that. Ever in our country. And the reason is they can't lie about the deficit because they have to balance their budgets. And now we're in a situation where we've got a 6%, we're at a deficit that's now at 6%. And the biggest contributor to that has been the tax cuts that were supposed to pay for themselves. Do you think there's any way to meaningfully reduce our deficit by cutting just discretionary spending in our budget?
Senator, when Secretary Bessent talks about getting the deficit down to 3% of GDP, it's by implementation of the president's full economic plan. Part of that is spending reductions, part of that is growth, part of that is tariff policy, part of that is deregulating the economy, part of that is unleashing American energy abundance. It's the cumulative activity of all of those things that Secretary Bessent has argued that would realize the reduction.
I would just say, we'll be back here and we'll have a conversation about it. I would say in this case, it's a very unusual case when the sum of those parts that you just described are actually going to add up to something much less than itself, which is blowing a massive new hole in the deficit, just as it did the last time your predecessor sat here and made exactly the same argument. Thank you, Mr. Chairman. I'm grateful for the time.
Thank you. Senator Lankford.
Mr. Chairman, thank you. Mr. Faulkender, thank you for stepping up to do this again. You have a great career at the University of Maryland. You have all kinds of academic credentials. You've taught all over the country and have led in economics in many ways. You've served the nation before in the Treasury, so you know full well the speed and the amount of work that this is going to be able to step back in again. So I appreciate you stepping back in again on this. You're eminently qualified to be able to take on this task. On the economic side, I do want to be able to drill down a couple of things. President Trump, in his speech in the joint session on Tuesday night, talked about bonus depreciation, full expensing, and that he wants to be able to see that. That has in the past been a bipartisan tax issue, understanding full well what that means. That it doesn't change the amount of revenue coming into the Treasury. It changes the timing of the revenue coming into the Treasury, but it makes a tremendous impact on the economics of the nation on that. Literally, it is scored as a multi-billion-dollar cost to the government because in years 7, 8, and 9, the money's not coming in as fast as they can actually count for years 11, 12, and 13. They just don't count for those. So it looks like a huge cost. And my colleagues will say that's a giant hole in the deficit. When full expensing is actually done, does that change the amount of revenue coming into the Treasury, and what's the economic impact of that?
Right. So thank you for the question, Senator. I enjoyed meeting with you. If you go over what we'd call in economics the infinite horizon, there is very little change in gross receipts that come in as a result because it's essentially delaying the recognition of that revenue. And because most of the budgeting that's done in Congress is done in 10-year windows, as you articulated, anything that would have, without bonus depreciation, come in 7, 8, 9, and 10 is instead pushed to the out years, and therefore it makes it look for budget scoring purposes more costly than it would be over the full implementation horizon.
Appreciate that. During the Biden administration, we had great frustration around this dais, and it became bipartisan frustration with Secretary Yellen, who was trying to create a Pillar 2 tax structure for the world that would dramatically increase taxes on American companies and allow foreign entities to be able to take more American dollars, literally hurting our economy and benefiting theirs. We finally got to a point where we made clear to her, you cannot create tax policy. One of the worst aspects of that, of many aspects of Pillar 2, was that it left China out of it. China got to be exempt from it. Now, this was a long series of things where, for instance, subsidies monies went for solar manufacturing to China to be able to compete against American companies. After it said that wasn't going to happen, it did happen. Multiple different aspects. You had mentioned already some of the pressure on Iran and trying to get maximum pressure on that. As in the Treasury Department, what is your plan with dealing with China and the economic competition there?
Thank you, Senator. China is without question the greatest challenge that we face. I think one of the great successes of the first Trump administration was to reorient policy, not just for the United States, but among many of our partners, to reassess our reliance on China that had emerged. And so our objective would be to work with our partners to engage in policies here at home in order to onshore many of those activities. As we saw during the pandemic, there are certain critical industries where China has a near monopoly on providing various components that Americans are reliant upon. And those could be weaponized against us if we were to engage in any kind of challenges with the Chinese. And so using tax policy, using regulatory policy and tariff policy, it's the intention of the administration to see much of that activity return to the United States and reduce China's ability to blackmail the West.
Okay, that's very helpful. It's interesting side by side in some of the conversation here. Under the Biden administration, they were facing court action because they were giving away student loan dollars. They were not allowing, or they're making sure that people didn't have to pay their rent and saying no one can foreclose on anyone, no matter how long they stay there and can't pay their rent. They're creating tax policies out of thin air and not actually coming to Congress to be able to do that. You're facing challenges today because you want to reduce regulations in the country. You want to be able to actually provide greater transparency. And for some reason saying that Treasury should be able, American people should be able to follow the money at Treasury, the same as Treasury is asked to be able to follow the money everywhere else, is somehow a bad thing. So now in this upside down world, more transparency at Treasury is now a problem. And you're being attacked for literally saying, we don't want to know where the money was going, don't list it. That just seems backwards in my world. But on the regulatory front, this is especially true because under the Biden administration, dramatic increase in regulatory costs in that. How does that affect our economy?
So, Senator, there are some estimates that are coming from one of my former colleagues from the last administration, Casey Mulligan, that the deregulatory efforts during the first administration reduced regulatory burdens on the average household by about $10,000, whereas the regulatory burden imposed during the last 4 years is in excess of $40,000 being imposed upon them. So there's an enormous amount of time and money that goes into compliance. And so we need to make sure that we economize those things and use regulations smartly, so to make sure that the American people are safe, but at the same time not impose such burdens that it creates enormous cost that's passed on in the form of higher prices.
Thank you. Thank you, Mr. Chairman.
Senator Whitehouse.
Thank you, Chairman. Mr. Faulkender, I'd like to take my time with you today to go over publicly what I said to you when we met privately with respect to very dark economic storm clouds that are on the horizon that relate to climate change, and which the administration is unable to address seriously or soberly because with massive fossil fuel political funding behind it, it has made it an article of faith to deny climate change, indeed to say falsely, a lie, that climate change is a hoax. We've actually been through 3 eras on climate change. First was the science era, and God bless them, the scientists got it right. Even the ones paid by Exxon got it right. And based on their warnings, it fell to Congress to act to head off the dangers that the scientists had predicted. And we failed to do so because of the improper pressure of the fossil fuel industry through dark money political contributions, through probably the biggest campaign of disinformation America has ever seen. All serious bipartisan efforts on climate were squelched. So having the scientists done their job, having Congress failed cataclysmically at doing its job, now we're into stage 3, where the chickens come home to roost and the predicted consequences begin to happen. And as you and I discussed, the place where that's most evident now is in the place where an entire American industry is obliged to look forward truthfully at what the future portends. Not the fake hoax of the fossil fuel industry that everything's going to be fine if we keep polluting, but the reality that somebody who has to make actuarial risk judgments has a fiduciary duty to take into account. And if you look at that, the storm warnings are severe. The chief economist of Freddie Mac has said that we are headed for an insurance collapse around coastal property values that will cascade into a mortgage collapse around coastal property values that will cascade into a crash in coastal property values that will be so significant economically that will cascade out into the full economy in the same way that the mortgage meltdown in 2008 cascaded out into the entire economy. That was a warning on coastal property values. Since then, wildfire risk has stood up like the evil sibling of coastal risk and adds to the danger of insurance markets in entirely new areas far away from our coasts. Just in the banking committee here 2 weeks ago, the Fed chair said in 10 to 15 years, there are going to be areas of this country where you can't get a mortgage any longer. That's a pretty stern warning that something has to change. And they're not alone. The Financial Stability Board, which is the entity that warns the international banking system of systemic dangers, has made the same warning that as cost of claims increase expected under climate change, insurers are likely to increase premiums, making insurance more expensive or even unaffordable and reduce coverage. In extreme cases, insurers may withdraw from market segments altogether, which they are already doing in Florida and California. As it becomes uneconomical to offer insurance, resulting in a larger protection gap, in turn, this could trigger second-round effects that could make the financial system less resilient, i.e. the whole financial system at risk, which they describe at the very front as climate-related vulnerabilities in the financial system when triggered by climate shocks could threaten financial stability. Right behind that comes the CBO report, bipartisan report, in which they say property owners, mortgage lenders, insurance companies, and the federal government will bear losses due to floods and wildfires. If those losses lead to cascading failures of financial institutions, as the other warnings have said, they would undermine our financial system. The Economist magazine in April put on its cover the warning that climate change damaging insurance markets imperils the largest asset class on the planet, real estate, and predicts a $25 trillion hit to real estate. The lie that climate change is a hoax is no longer just an act of political malfeasance. It is now an act of economic malfeasance. And I've taken my time this morning to put you on notice, the way I put Secretary Bessent on notice, that these storm clouds are real and they are out there and we are sailing into them, and you had better be prepared. I'm going to give you this whole volume of documentation of this risk, which the Treasury seems under this administration to be outright ignoring for not you, you'll be a busy person, but for your minions to look to and report to you on the credibility of these multiple reports and warnings. I urge you to take this seriously, and I thank the chair for letting me go a moment over my time.
Thank you. Senator Hassan.
Well, thank you, Mr. Chair. Congratulations on your nomination, sir, and thank you for your willingness to serve. And I appreciate the time you took with me in my office yesterday and the time we had to talk about your priorities at Treasury if you are confirmed. And I just want to follow up on a couple of those issues. So I'll start with the question I'm asking every nominee. If directed by the President of the United States to take action that would break the law, would you follow the law or follow the President's directive?
Thank you, Senator. I enjoyed talking with you yesterday, and I will follow the law.
Thank you. Dr. Faulkender, if the President instructed you to force the IRS to provide the White House with the personal financial information of his political opponents, would you comply?
Senator, as we discussed, I would consult with our general counsel to understand what the law is, and I would follow the law.
Thank you, because just a reminder to folks, President Nixon's White House counsel once complained in an internal memo that we have been unable to obtain information in the possession of the IRS regarding our political enemies. And it was wrong then for President Nixon's White House to attempt to do that, and it would be wrong now. And I appreciate your answer. Dr. Elon Musk has attempted to gain total access to the private personal data of American citizens that's stored at the IRS. Is there any private personal information at the IRS that you believe Elon Musk should not have access to?
Senator, it's not my understanding that Elon Musk has any access to IRS. We have two people who have gone through standard onboarding at the IRS. One is detailed from OPM, one is a Treasury employee. They have received the same onboarding ethics and legal training and the same explanations as to their access to taxpayer information as the memorandum of agreement between the Office of Personnel Management and IRS says. It's the Secretary's intent that that person not have access to taxpayer information.
And my question is, if Elon Musk demands it, will you stand up to him? Do you think there is personal information at the IRS, understanding that the people who are working there now have gone through ethics training and the like, but Elon Musk has his habit of tweeting and all of a sudden getting what he demands by tweet from this administration?
Senator, only people authorized to access IRS information will be given access to IRS information.
Thank you. Earlier this year, Elon Musk gained access to the Treasury Department system that processes all federal payments, giving Elon Musk the ability to personally block any payment by the federal government. A federal district court judge has temporarily blocked his illegal access. If this court order were lifted, would you allow Elon Musk access to Treasury's payment system?
Senator, Elon Musk does not have access to the payment system. Only people who are authorized Treasury employees to have access to the information.
So let me ask you this question. Elon Musk has enormous conflicts of interest, right? I mean, I think he's gotten something like $38 billion in federal contracts. His visibility into various systems that has reportedly gotten access to allows him to get proprietary information about his competitors, for instance. So if Elon Musk were to demand, or the administration were to say he's now authorized, and I can hear President Trump say it. President Trump says, you know, anybody's authorized that I say to for a security clearance. So now let's say President Trump says, Elon's authorized. What are you going to do?
Senator, I would consult with the general counsel and make sure that only people who have access, who are authorized to have access to Treasury information, are granted access to it.
So I'll follow up on that. You are saying that you will prevent Elon Musk from, for instance, blocking federal payments for his own personal or political purposes. How are you going to do that?
Senator, as with any Treasury employee, their access is subject to oversight, and there are records as to that access. And it's my understanding that there are disciplinary activities that we can take if those procedures are violated.
Right, but what happens to Elon Musk if he violates them?
Senator, there's a hypothetical that I have not consulted with the general counsel on exactly how one would go about doing that. I commit that if confirmed, I would work with the general counsel's office and the IRS and the Bureau of Fiscal Services to make sure appropriate safeguards are followed.
I thank you for that. I'm almost out of time, and I'm just going to say this to the chairman and to my colleagues. My questions for nominees have now changed considerably, because what I am looking for, and there have been some encouraging answers from this witness, are people with the character and the belief in the rule of law who will stand up to an administration that seems to be very willing to ignore the rule of law, and that's putting it mildly. And we have a president who's already violated the Impoundment Control Act. Elon Musk has been his prime agent in doing that. And what is most important to me and the American people is that if we can't get Elon Musk to come to this committee or come to Government Oversight Committee or come to the Help Committee, we've been asking for him to come so we can understand what he is doing, because he is effectively running the executive branch for the entire United States of America. We are looking for people who will not be bowled over by the fact that Elon Musk is the richest and apparently most powerful man in the world. Thank you.
Thank you. Senator Cortez Masto.
Thank you. Mr. Faulkender, welcome. Congratulations on your nomination. Welcome to your two daughters as well. Where are you currently employed?
I am currently employed by the University of Maryland, detailed to the United States Treasury.
Detailed to the United, what does that mean?
So there is an act called the Intergovernmental Personnel Act that is often used by academics when they serve in various government positions.
And so in that detail, is that where you stated earlier, I think to one of my colleagues, that your current role is as counselor to the Secretary of Treasury?
That's correct. I am detailed to be a counselor until confirmed.
Okay. And so was it inadvertent that you did not report that on your Senate Finance Committee Statement of Information requested, the questionnaire? I didn't see it anywhere on the questionnaire. Was that inadvertent on your part?
My understanding is that the documentation I provided, both in the questionnaire and the 278E form, which is the ethics form, shows that I'm a counselor. I may have filled out the Senate questionnaire before the inauguration, and that at that time I was not yet detailed.
So when did you become detailed?
On January 21st.
So you would have filled out this questionnaire prior to January 21st?
My recollection is that I began filling it out prior to January 21st, yes.
Interesting. Okay. Let me jump from there to the topic of privacy. Section 6103 of the tax code prohibits the release of tax information by the IRS with very narrow exceptions, such as when a court order has been issued in the criminal investigation of a specific person. There have been concerning reports that you've heard earlier my colleagues talking about that members of DOJ, as well as the Department of Homeland Security, have been attempting to access databases of confidential tax and personal information held by the IRS. My question to you is, will you commit to fully following the law, even if other agencies are pushing Treasury and IRS for access to that confidential information?
Senator, I know that all employees working with DOJ are also working with the Office of General Counsel at Treasury and at the IRS, and I commit that I will follow the law.
So I'm not sure what that means by the members of DOJ, because they shouldn't have access to this information, but you will follow the law to ensure that individuals like members of DOJ and Homeland Security, who should not have access to this information under the law, do not have it, correct?
In everything I do, I will consult with the general counsel to make sure that I am in compliance with the law.
And will you commit to reporting to this committee any attempt by any agency or any organization to gain access to information covered by 6103?
I will commit to following the law, and that'll include any disclosure requirements that would be, that the law would have me engage in.
Okay. Mr. Faulkender, on February 9th, 2024, you wrote an article for the America First Policy Institute that did an analysis of a tax bill proposed by Senator Wyden and Congressman Jason Smith. You praised a part of the bill that repealed the employee retention credit because of, and I quote, rampant cases of ineligible businesses fraudulently claiming the credit. So as you make personnel decisions at Treasury and who you're going to hire or not hire, would you have concerns about hiring someone who made money urging businesses to ignore the advice of their accountants and apply for the ERTC eligibility credit even though they weren't eligible? Would you hire somebody like that?
Senator, I would look to hire people that have gone through a full vetting and that have complied with the law.
So it doesn't matter whether or not they made money off of telling people that it was okay to apply even though they were ineligible and went after that ERTC credit.
Senator, I would commit to hiring people of high quality, who have the capability and experience to do the role, and make sure they are people of good character.
You make a lot of comments about following the law. Let me ask you this, and I appreciate that as an attorney. If, after Trump is out of office, and there's a potential investigation about whether he followed the law or not, would you comply with that investigation and continue to work with those investigators?
Senator, I'm hesitant to think about such an investigation in a hypothetical, but I will follow the ethical and legal obligations that I have if confirmed to this position.
To work with those investigators if there was an investigation?
I mean, obviously, I would seek counsel to make sure that I'm in compliance with my statutory obligations.
Okay. Let me ask you this. The Biden administration's Treasury Department implemented a new outbound investment security rule that prohibits and imposes notification requirements on certain types of high-tech investments by U.S. entities in Chinese companies. High-tech investments by U.S. entities in Chinese companies. Do you support this outbound rule, and do you support the concept of the outbound investment prohibitions?
Senator, I've received a preliminary briefing on it. I understand there are 3 sectors to which this is being evaluated. It's early in the reporting process, so conceptually it makes sense to me. I think we need to look at, are these the only 3 sectors that we want to limit ourselves to? Are there others we should do? Does the current compliance regime that was implemented make sense? My understanding is we have 3 employees at Treasury that are focused on this right now, but may need to expand it. So it's very early in the program, and so I don't want to say that exactly as it was initially structured is ideal. Instead, I'll commit to you to continue investigating it as it's going into its implementation stage, and happy to work with your office to see what improvements we can make.
I appreciate that. Thank you for letting me go over my time.
Senator Blackburn.
Thank you, Mr. Chairman, and congratulations on your nomination. We are glad that you are here. I know you've done some work on tying benefits like the child tax credit to work. And I think if we are going to incentivize people to get into the workforce, we have to remove incentives that are keeping them out of the workforce. And I think we're all concerned about rampant fraud that we have seen in some of these programs, and especially from the pandemic. And of course, DOJ is helping to root that out. And getting the fraud out of benefits should be a first step when we look at making these programs solvent. And I'd like for you to talk a little bit about what you would do to restore integrity in that benefits system and bring forth concepts like tying benefits to work that would help elevate our workforce participation rate?
Thank you, Senator. I agree with you that part of the objectives of the Secretary and the President are to root out the fraud that is in place, and that's why improving the payment systems so that departments and agencies responsible for implementation of programs have more tools to identify potential sources of fraud and reduce them. When it comes to benefits, I agree with you that ensuring that we don't create disincentives to work, it's important that we encourage people during their prime working years to continue to be part of the labor force, and what we don't want to do is create disincentives whereby they decide not to be in the labor force because of benefits. And so work requirements, I think, are a relevant and important component to include in those programs.
And let me ask you about some of these foreign tax schemes that we're seeing that I think are discriminatory in nature and hurtful to U.S. competitiveness. The OECD's Pillar 1, Pillar 2, the GMT, you're looking at U.S. companies paying nearly 40% of the burden when it comes to the Pillar 2 taxes. And you've got companies like China that, because they are state-owned, they're paying nothing. And of course, this hurts us. And also some countries that are putting in place DSTs, and that is something else that hurts us, disadvantaged us. Talk about what you can do to reassert U.S. leadership on the global stage in dealing with these unfair taxes.
Thank you, Senator. Yes. So Pillar 1, looking at digital service taxes at the OECD. Pillar 2, the global minimum tax. The concern we have is that both of them disproportionately targeted American firms, that there are not enough safeguards in those negotiations to recognize the tax structure that we have in the United States. That's why the President issued an executive order calling on Treasury to reevaluate our participation in these OECD negotiations and to make sure that any couple of things. Number one, that United States firms are not disproportionately discriminated against in the way that other countries tax U.S. multinational activities in those countries. And then second, we want to make sure that the sovereignty of the United States is retained here at home. It is not the case that global organizations set tax law. It is the United States Congress that sets tax law, and that's what was so discouraging about the approach the previous administration took to its negotiations with the OECD.
The previous administration also came up with a Corporate Transparency Act, the CTA, which broadly would have disadvantaged Main Street businesses, small business owners, burdened them with paperwork, and caused them to expose information that they ought not to have to expose. So I appreciate that the Trump administration in Treasury has withdrawn that. And I think it's important for Treasury to keep an eye on Main Street and small businesses. In that regard, what would your initiative be?
Right. So thank you, Senator. Secretary Bessent has expressed that it's critically important that Main Street have an opportunity to thrive. And that means finding the right balance between national security and burdens that we're imposing on America's small businesses. The largest businesses out there can afford all of the compliance activities and burdens that are imposed upon them. It's the smaller businesses that have a smaller customer base to spread those costs over that are harmed. And so that's why Treasury is going to reevaluate the rule that was implemented, the rules implementing CTA. We're going to reevaluate those to make sure that the right tailoring takes place.
Sounds good. Thank you, Mr. Chairman.
Senator Cantwell.
Thank you, Mr. Chairman. I know there's a vote going on and people are trying to get back and forth, so I'll try to be as brief as I can. Mr. Faulkender, thank you so much. I had similar conversations with the Secretary of Treasury on markets, but every day I'm getting up and all I'm doing is reading the front pages of our newspaper. Well, I'm reading more than the front pages, but every day in the majority of newspapers in my state are comments about the tariffs. We're a very trade-dependent state. And so now I feel like we're almost just having chaos about what are we doing? One day it's about fentanyl, one day it's about emergency services, one day we'll give these exemptions, one day we'll go back to this. And so I'm trying to get your views. Apples, potatoes, and wheat are the largest agriculture exports in our state. They represent over $3 billion worth of agricultural products around the world. And so I'm trying to understand, if you understand, the uncertainty that's being created right now with these tariffs. If you get that it's hard for businesses to even follow what is the predictability and certainty about what the president is even doing or proposing, because it's changing every day.
Thank you, Senator. As Secretary Bessent's talked about, there really are three objectives with tariffs, right? So one of them is they potentially are a source of revenue to the federal government. The second is they are to address longstanding inequities in the way that other countries have provided subsidies, manipulated their currencies, engaged in technology theft. And then the third is as a negotiating tactic in order to get other countries to address some of the concerns that the United States has and using access to U.S. consumers as an opportunity to obtain concessions. And so I think when you look at the president's approach on Canada and Mexico, it was very much to get them to focus on the fentanyl crisis, on the fact that 100,000 Americans are dying of fentanyl.
Do you really think that Canada was our fentanyl problem?
Senator,
Do you?
I have not had access to the data on that. My understanding is that some of it does come in from Canada. I grant to you that more of it comes from Mexico than Canada.
A lot more. But so you're saying it's about revenue, which I heard this from the first Trump administration. He wanted to pay for infrastructure by doing tariffs. I disagreed. He never got an infrastructure bill. We did get an infrastructure bill. So what I'm tried to express many times, and I hope our colleagues will join us in trying to work with the administration or show that this is a congressional responsibility here, is that tariffs really do hurt our economy. When those tariffs and retaliatory tariffs that shut down the Apple market, $120 million market just to India alone, that we then had to get the tariffs removed, and they're just recovering from that. And so now we're starting this again. And so the fact that does the president believe that opening markets is a key goal here? Does he believe in opening markets?
Senator, I think the objective is to ensure that manufacturers here in the United States face similar conditions when they export as when foreign manufacturers import into the United States. And so there's very much a focus on reciprocity, and that can mean higher tariffs for both countries. It can also mean lower tariffs for both countries. I would be perfectly fine with an outcome where reciprocal tariffs cause other nations to lower their tariff rates and grant greater access to their markets for our manufacturers.
I definitely disagree with the president on this. I believe in the innovation economy. I believe that we set the mark with the CHIPS and Science Act of saying invest, and we're going to test bed faster, and we're going to deploy faster, and we're going to grow faster. And we were seeing the results of that. Now, with a very integrated global economy with supply chains, you're disrupting with these tariffs the supply chain. That's not even my question. My question, though, was, does he understand the level of chaos that is happening now? Because people can't even follow what his game plan is. So I appreciate that you've illuminated that it's about revenue, that it's about inequities, and now you're also saying it is about concessions. But I really, really hope that he understands how much damage is being done every day to the agricultural sector. And it's not that rich people won't buy farmland. They will buy farmland. It's just we'll have a lot less farmers. So, Mr. Chairman, I hope we all can help work on this in the future.
Thank you, Senator Cantwell. I get to ask my questions now. Mr. Faulkender, good to have you here this morning. Congratulations on your nomination and your willingness to serve our great country. I really appreciate our conversation we had in my office yesterday discussing the upcoming tax cliff and the responsibility we have to avoid a $4.6 trillion tax increase. In fact, you said it well on the issue of permanence. You said, we don't want to defer a $4.6 trillion tax increase by our actions. We want to permanently make sure it doesn't happen. It's imperative we succeed in passing this bill. And as you said in our conversation, permanently passing this bill and preventing this tax hike on our small businesses families is absolutely one of the most important missions we have going forward. President Trump did great things during his last term. This Congress, we will again deliver on his promises to the American people and cement his legacy by making this historic tax cut permanent. I've been vocal about the need for clarity in the tax code and proudly led a letter alongside the chairman of this committee, as well as our majority leader, John Thune, and 6 other members of this committee saying just that. After the crushing inflation of the last administration, Montanans need assurance that we will fight to keep their hard-earned dollars in their pockets and not the government's. Mr. Faulkender, how does permanence in the tax code and removing that uncertainty going forward grow our economy and actually benefit taxpayers?
Thank you, Senator. I also enjoyed speaking with you yesterday. The benefit of permanence is that when businesses make long-term capital decisions, they're wanting to project the benefits of those investments, not just over the short horizon for which a tax code may be in place, but they want to think about it over the entire duration of that capital allocation. And when you consider that a significant number of our businesses file their taxes not through the corporate code, but through the individual code because they are partnerships or they are sole proprietors, it's the individual tax rate that applies to the outcomes of those investments that they're making in those small enterprises. And so just as we made the corporate income tax rate permanent into the 2017 legislation, it's important to come back and make permanent these rates and the pass-through deduction that are set to expire at the end of this year.
Mr. Faulkender, during our discussion, one thing that stuck out to me is you quoted one of my heroes as well as Milton Friedman. And the Milton Friedman quote is this. I'm going to expand the quote. You shared a part of it. It's very important, but I went back and looked at the context of that quote. I'm just going to expand the full context. Milton Friedman said this: keep your eye on one thing and one thing only: how much the government is spending, because that's the true tax. It's well said. The key to fiscal sanity is not just making tax cuts permanent, but doing so in a fiscally responsible way. We have a once-in-a-decade opportunity, perhaps once-in-a-generation opportunity, to bring back economic greatness, and which is why I believe we need to be as passionate about cutting spending as we are at preventing a massive tax increase. I'm working with my colleagues here in the Senate and the House to deliver just that. After the passage of the Tax Cuts and Jobs Act of 17, we saw one of the greatest economies in the history of our country. And then, of course, we had the black swan event of COVID. We cut taxes, wages increased, household income rose by $5,000. It was across every demographic. Minorities benefited greatly from this. And revenues hit an all-time high, tax revenues. Unfortunately, the Democrats' reckless tax and spend agenda wiped out many of those gains. How would cutting spending unleash the American economy?
Thank you, Senator. As your comments suggest, if you look at the fiscal challenge that we have, over the 50 years prior to the pandemic, federal spending averaged just over 20% of gross domestic product. Since then, it's been approximately 23% and remains in that range. That spending has the potential to crowd out private investment, those larger deficits, remove capital that could instead be available for private enterprise and small businesses. And that's why, as Secretary Bessent has discussed, if you look at the government and the government adjacent sectors, They have done well over the last couple of years, but the purely private sector, they have been basically stagnant over the last couple of years. Part of that possibly is arising from the fact that all of this spending is crowding out capital that could be going into the private sector.
Thanks, Mr. Faulkender. Let's see. Let's take it. Senator Warren is up next.
Thank you very much, Mr. Chairman. So President Trump had exactly one big legislative accomplishment in his first term, a giant tax cut for millionaires, billionaires, and massive corporations. In fact, it was so giant that a big hunk of it lasted only 8 years and still cost $2 trillion. Now, the 8 years are up, so Republicans want to do another tax cut for the ultra-wealthy, which Congress's nonpartisan budget scores say is going to cost $4.6 trillion this time. Now, congressional Republicans say they care about the deficit, so they have a plan to fix things up. Repeal math. Here's their story. Because they already had 8 years of tax cuts that ran up the debt, congressional Republicans claim that 10 more years of tax cuts will be free. They named this gimmick the current policy baseline. They should have named it magic math. It is so nuts that when we need to figure out the cost of tax cuts, the Senate has never switched to it over using real math. Now, Dr. Faulkender, if confirmed, you will play a role in whatever tax deal the Republicans put together. So let's talk about math, magic math and real math. Dr. Faulkender, does renaming tax cuts produce any additional revenue?
Does renaming them?
Yes. Calling them something different. Does that produce any additional revenue?
I don't think renaming something changes. If it changes behavior, it has the potential to change revenues.
Wait, so are you saying renaming tax cuts produces additional revenue? Just renaming it?
I can't imagine that it would unless it causes people to behave differently.
Okay, I'll take that as no. Fair enough. Claiming that somehow losing $4.6 trillion in tax revenues is free is just plain nuts. Congressional Republicans are hoping they can fool people long enough to deliver giveaways to their wealthy donors before anyone figures it out. But at the end of the day, Republicans cannot repeal math. A bunch of tax cuts for billionaires will cost $4.6 trillion. But congressional Republicans don't like that answer. So I'm wondering, if they love magic math so much, I want to ask the same question in reverse. If the Republicans' idea of magically not counting the cost of tax cuts for billionaires makes sense, what about not counting the cost of tax cuts for ordinary people? That is, for extending the child tax credit. Dr. Faulkender, according to Republicans' magic math, if extending the tax cuts is free, shouldn't extending a temporary expansion of the child tax credit also be free?
Thank you, Senator. The Tax Cuts and Jobs Act increased the child tax credit from $1,000 to $2,000. Yep. And so if we allow the tax cut to expire, it would mean that the child tax credit would go back to the $1,000.
Right. So the question I'm asking, using Republican magic math, if it is free to extend tax cuts for billionaires, isn't it also free to extend tax cuts for poor kids?
Senator, I'm not familiar with magic math. What I do know is that the American people look at the current tax code, what they paid last year and what they paid this year, as the current environment.
Yeah,
and so the question is, when we talk about extending it, I would argue that extending the TCJA is making sure that the American people don't incur a $4.5 trillion tax increase.
So you do think that renaming the tax cuts will produce $4.5 trillion in revenue?
No, Senator, I didn't say that it had any impact on the bottom line deficit. I'm just saying when you ask me what a baseline is, to me, the baseline is what I'm currently doing.
I'm not asking you that. I'm asking you what it costs to put in $4.5 trillion in tax cuts. Look, if Republican magic math works, then why not extend it to everything we spend money on? How about money we spent last year on roads and bridges, or child care subsidies and the workers who process Social Security checks? Of course not. No one is going to do that. Congressional Republicans want to use magic math to pass giant tax cuts and then try to tell the American people those tax cuts cost nothing. Hardworking Americans understand that $4.6 trillion for a billionaire tax cut is not free. Congressional Republicans are trying to sell magic math so they can help billionaires. And fortunately, the American people are just not buying that. Thank you, Mr.
All right, my colleague from New Mexico.
Thank you, Mr. Chairman, Mr. Faulkender. Thanks for coming by the office and getting a chance to visit a little bit. When we talked about the Department of Government Efficiency's access to Treasury's payment system, you said, quote, "It is not Treasury's role to stop authorized payments," unquote. Yes or no, does Treasury have the legal authority to stop payments authorized by Congress?
Thank you, Senator. I also enjoyed meeting with you. It's not my understanding that Treasury stops payment. Treasury processes legally approved payments.
If you were asked by DOJ to use Treasury systems to stop payments authorized by Congress, would you stop those payments?
Senator, again, it's my understanding that departments and agencies are the ones who authorize the payments that are sent to Treasury. So Congress authorizes a pool of money for a department or an agency. There are contract officers and procurement officers at those department and agencies that are allowed to then approve use of that money, and then they send a file to Treasury and Treasury processes it. That's my understanding of Treasury's role in this.
I appreciate that. That explanation sounds like a no to me, which I agree with, so I appreciate that. Yes or no, if you were asked by DOJ to use Treasury payments to stop payments to USAID, would you comply?
Senator, it's my understanding that USAID is part of the State Department, and that what occurs is that the State Department approves those payments.
I appreciate that as well. Mr. Faulkender, you once taught at the University of Pennsylvania's Wharton School, correct?
Yes, I was a visiting faculty member there for one semester teaching a graduate course on empirical methods.
I believe that this is the university and program that President Trump also attended.
Well, I taught in the PhD program,
Yes.
so I don't believe that President Trump attended Wharton's PhD
I'm not suggesting he received a PhD.
Oh,
I
I'm
appreciate
sorry.
that clarification, but he went to school there. Is what
Yes,
believe.
I thought I heard you say program.
Yes,
Yeah.
I thank you for that clarification. Now, I was interested to read recently that the University of Pennsylvania Wharton School found that President Trump's tax proposal would increase primary deficits by $5.1 trillion. The reason I'm asking that question is a continuation of the conversation you were just having. The Senate Republicans are planning to pass a $5.1 trillion, what my constituents have told me is a tax scam for the wealthy, by pretending that extending their 2017 tax scam will only cost $0. So I have a different question that I'm trying to understand this better, and so I want to simplify it by saying, do you by any chance rent here in Washington, D.C.? Do you rent a place to live?
I live in Bethesda. I don't live in Washington, D.C.
Do you own your home or do you rent?
I rent.
Oh, okay, perfect. So if someone's rent is $2,000, let's use that as a base amount, and the landlord raises the rent by $50 a month, going forward, is the rent only $50? Is that the cost?
So, Senator, my understanding is that under baseline scoring by CBO, spending does continue even though we only pass one-year authorizations, whereas taxes follow current law. So the idea is, if you're going to extend spending, even though it hasn't been authorized, if the baseline incorporates higher spending, even though it's not been authorized, why wouldn't we extend current activity for the tax code? That's my understanding of the discussion. Now, at the end of the day, this is a decision for Congress as to what you use as the baseline. That's not something that I, if confirmed as Deputy Secretary of the Treasury, would have any role in determining.
I appreciate that. That's not what I asked. That's what Senator Warren asked. What I'm asking is, if your rent went up by $50, is the cost to you next month, when it would take effect, $50, or the cost you're paying now plus $50?
In your question, my rent payment to my landlord in the next month would be $2,050.
I appreciate that very much. Well, the reason I asked the question is very oversimplified version is so that way, we just keep things simple for all of us involved so that we're able to call balls and strikes here. And what it feels like to me is that the books are just being cooked. I mean, this is, call it whatever term we can put on this, but I'm just surprised that this is where we are. With these accounting gimmicks. I've said in this committee before, and I've said other times, if we want to get our fiscal house in order in America, Congress needs to have fiscal restraint, and we need to reinstitute PAYGO. Under Bill Clinton, when we had these projected surpluses and whatnot, it was a simple program. You paid as you go. If you had a new piece of legislation that cost $1, you either had to cut $1 or create revenue to pay for that dollar. I don't know why Congress has abandoned this. It got taken away by Republicans when they took over a few decades ago, and then Democrats who never put it back when we were in the majority. It seems to me that this is something we should all agree upon. Now, I know that you're going to sit here and explain, as you did with me, to my oversimplified question about rent as well, but with all of these things, if folks are going to get to fully pay for these programs, and I appreciate the conversation that my Republican colleagues in the Freedom Committee are having in the House right now, they're going to have to cut programs to get to this 5.1 trillion or 4, again, fuzzy math getting there. But do you support cutting Medicaid to help pay for President Trump's tax scam 2.0?
Senator, it is at the end of the day Congress that makes spending decisions. It's not the Treasury Department.
I appreciate that. Mr. Chairman, I have some other questions based on the conversation that myself and Mr. Faulkender had around using all tools available at the Treasury Department to stop the flow of fentanyl. I'll submit those into the record. I very much appreciated the conversation we had and the commitment to use all tools that exist to be able to stop this flow as well. So I'll get those in later. Thank you for the time.
I share my colleagues' views, and without objection, they'll be put into the record. The next three who are here would be Senator Tillis, Senator Smith, and Senator Welsh. Senator Tillis.
Thank you, Mr. Chair. Mr. Faulkender, thank you for being here, and congratulations to Lauren and Catherine for being here. Your dad's going to get confirmed. And I look forward to supporting your confirmation that should not poison the well. I need answers to questions still. One, for example, is, are you familiar with the foreign-derived intangible income provisions of TCJA?
I am.
How important are they to you?
They're an important tool to make sure that U.S. operators have an incentive to engage in economic activity here instead of having that activity occur abroad.
Can you briefly describe, if you have the information at your fingertips, how activity changed after passage of TCJA and what could possibly happen if we didn't extend it?
Sure. So prior to the Tax Cuts and Jobs Act, if a company engaged in activity here, they faced a contemporaneous corporate tax rate of 35%. If they instead engaged in some of that activity abroad and had that activity recognized in a low tax jurisdiction, it could be minimal, single digits, if not closer to zero. And so what that does is it encourages that activity to occur abroad rather than domestically. What the Tax Cuts and Jobs Act did is it simultaneously brought down the rate for taxing corporate activity here from 35 to 21, and it raised the tax rate that would be paid on having that activity occur abroad. What you do is you reduce the wedge that is the differential when it comes to where that activity is located, thereby increasing the benefit of that activity occurring here. Some of the outcomes are that we have not seen tax inversions take place. So a tax inversion is when a U.S. company gets acquired by a foreign company largely for the purpose of having its activities taxed abroad rather than domestically. We saw those come to an end. We saw a significant, more than $1 trillion repatriated back to the United States following the enactment of the Tax Cuts and Jobs Act.
Thank you for that. Under President Trump's first administration, I think FSOC budget called for a 14-person staff. Secretary Yellen requested a budget for 44 staffers, 300% increase, but 44 staffers, 3 times. I don't know if you've looked at that yet, but that seems like a big jump. Can I just get you to commit to looking into that before you assume that you need 3 times more people than apparently the first Trump administration thought we needed in that role?
Senator, I commit to you that we're going to find ways to be good stewards of taxpayer dollars and make sure that any activity we engage in is done efficiently.
With respect to DOGE, give me an idea of, we've got different types, this is really maybe not even be in your lane, but I'm kind of interested in your, based on your past experience. DOGE is going to produce some one-time and maybe some ongoing benefits. The one-time benefits are just decisions that can be made by the administration. Can you, do you have any insight into some of the projects to date that are going to require statutory authority to really have staying power and fully derive some of the efficiencies the administration is trying to achieve?
I mean, Senator, what Treasury I think is mostly focused on right now is providing additional tools to all departments and agencies to better understand where their money is going by enacting process changes for payment files. Each of these departments and agencies, many of whom are failing audits right now, will better understand how their dollars are being used, and it's that better management of by having better information, they can better manage those resources, and will have more informed appropriations requests when they come back to Congress because they'll have been able to better identify how money's being used.
Well, thank you very much. We've got a lot of people running around. It's not for a lack of interest in this role. I, for one, think it's critically important. I look forward to supporting your confirmation on the floor. And again, congratulations to you and your family for the honor of being nominated. Thank you, Mr. Chair.
Senator Smith.
Thank you, Chair Crapo and Ranking Member Wyden, and welcome to the committee. Good morning.
Good morning.
Thank you for being here. Thanks for your willingness to serve our country. I'd like to start with something that I don't think gets brought up a lot in Finance Committee, which is the issue of tribal relations. And Mr. Chair, the Treasury Department has made great progress towards improving its government-to-government relationships with tribal nations, including establishing the Treasury Tribal Advisory Committee and the Tribal Affairs Office. This has benefited tribal nations, and it is also very important to Minnesota, and I think it's also helped the Treasury Department work better. So I want to just focus on this and ask you, will you commit to ensuring that the Treasury Department does uphold its government-to-government relationships with tribal nations and maintaining this statutorily mandated advisory committee and the office?
Senator, I was the Treasury point of contact for tribal consultations in the first Trump administration. I, in fact, attended a tribal event in Minnesota, and I was present at the initial meeting of the Treasury Tribal Advisory Committee, and I commit to you that we will continue to recognize tribes as governments and work with them to address their revenue issues that they have with the Treasury Department. And it was partially under my leadership that we recognized that an office focused on the unique issues of tribes was a more appropriate organizational structure than what it was when I first entered.
Thank you. I'm aware of your leadership on this, and I want to thank you for that. And I think it's important that that Office of Tribal Affairs stays in place. You established it, as I understand, and so we can keep it there. So you will make sure that if the Doge boys come in and decide that this is a place to find so-called efficiencies, that you will stand up to that.
Again, Senator, it makes sense to have people who are specialized in these activities because the issues for tribes are unique, and so it makes sense to have a separate set of specialists who focus on that. I would view it as inefficient to eliminate that specialization.
Okay, thank you. I'm not trying to trap you on this. I just want to make sure that people who understand how this works are making the decisions about how to staff it and how to manage it and how to organize it, and not folks that are, coming from another place. Let me ask you, let me find my notes here. Let me ask you this question. There's a lot of talk right now about the debt ceiling. The debt ceiling was breached in January. We are in the process of evaluating this massive budget reconciliation bill. And I know that Treasury is currently deploying extraordinary measures to delay default on our national debt. And I want to ask you about the interplay between that challenge and also what's happening at the IRS. So the administration has already begun firing about 6,000 IRS employees last month, and The reports are that DOJ is also working on a plan to cut the IRS workforce in half. And I want you to address for us what the logic is behind those staff reductions and what impact you think that will have on the national debt that we are grappling with.
Thank you, Senator. As I mentioned earlier, I know that the Secretary has approved some initial reductions in the IRS. They were not in the taxpayer services area, so the Secretary has committed to there being no disruption to this year's filing season. Those reductions would take us back down to IRS personnel levels that we had during the first Trump administration, where we continued to successfully collect revenues. So I am not anticipating that there's going to be any disruption in our ability to engage in this filing, to engage in the collections at the IRS this filing season or thereafter. As I mentioned earlier, I have not been briefed on any plan other than what I just described as far as a further reduction in personnel at the IRS.
So I'm sure you're aware that in the Inflation Reduction Act, Congress substantially increased the staffing in IRS enforcement. And just as an example of the impact and the efficiencies of that, through that work, we were able to achieve $1 billion in increased enforcement from about 1,600 high-wage millionaire delinquent taxpayers, high-wage folks that were not paying their taxes. Thanks to the work of the IRA and additional enforcement at the IRS, we were able to accomplish that. I mean, can you acknowledge that that was a good return on investment for us to make, to make sure that we have accountability and people are just paying what they are owed?
Senator, I've not yet been briefed on what additional revenues came in as a result of that additional activity. Where I think we can agree is probably the best way we can get better collections is to improve the modernization of the systems, so that rather than working off of 1960 systems, we can actually have IRS enforcement activities focused on where fraud is most likely taking place.
Well, I know I'm out of time, Mr. Chair. I mean, these numbers come from IRS press releases. I'm sure they're accurate, and I think that this is not, if you don't have people doing the enforcement, then you're not going to get the enforcement that you need. That's a different issue from technology, but thank you, Mr. Chair.
Thank you, Senator Warner.
Thank you, Mr. Chairman. Mr. Faulkender, it's good to see you again. I got to pick up where my friend, the senator from Minnesota, you would agree that IRS has antiquated systems?
Yes, sir.
Do you agree with independent assessments that you not adding a single new tax, but actual enforcement of existing laws could generate, over a 10-year period, excess of $500 billion? Some people have said $1 trillion. Do you think those independent assessments are accurate?
I'm skeptical of those numbers, that there's that amount that we could actually incrementally collect. I think that, again, as I mentioned to the previous set of questions, where I think we can best improve enforcement is by having better data, so that we have tax enforcement people going where the pockets of tax evasion are most likely.
I agree on the data, but I just, and I know we talked about this in the office, but just the idea, okay, we're going to not deal with taxpayer services, but if it appears that it is open season and we're going to cut back 50,000 folks, even with additional technology, or a total of 50,000 folks, we talked about this at some, I was a business guy for a long time. And I think that would be a stupid business decision. Many of us, and we didn't come to agreement, but many of my Republican friends, including the chairman, we talked about this at times and recognized that there was additional dollars in the IRS could actually save taxpayer money because we would have better enforcement. And I echo completely, we need the new systems, but I am hugely concerned, and I'm not going to beat you up the way everybody else does. I think they've already have on the Doge boys and what they're doing in national security, and it is beyond, it is making our country less safe. But on just plain dollars and cents basis, I think the notion that you can, the 12,000 people that have been fired are going to make no difference, that number goes up to 50,000, is going to make no difference. It defies the reality that all of us on both sides of the aisle had, and we may have had different numbers we agreed about how much new investment, but that IRS was woefully under-invested in. We needed to upgrade our systems. We need to bring back new modern technology. And I'm extraordinarily afraid that we are going to take a giant step back this way. Bringing in a thoughtful approach on any of these issues would make sense. I don't believe that's taking place. But I do want to touch on one thing that I think we agree on, and I want to make sure I can get the chairman nodding on this, since he and I have been partners on this. Is this CDFIs, Community Development Financial Institutions? Under the first Trump administration, we made record investments, $12 billion, $9 billion of which went for Tier 1 capital. We've seen that field expand 9 to 10-fold over the last decade. It is a broadly bipartisan issue. We have 28 members, 14 Democrats, 14 Republicans on this caucus. Senator Crapo and I have worked on things like, can we get a secondary market started in CDFI debt, which could again further expand that opportunity. We've worked together as well as trying to get on the Economic Opportunity Coalition to try to get dollars deposits in. I asked Secretary Bessent on this question, but would you continue to agree to work with me and us on CDFIs?
And Senator Warner, you do have me nodding on this.
Good. I want to make sure. I was hoping I was getting you nodding on the IRS conversation too, because I can remember some of those conversations. But like
Senator Warner, I'm happy to reiterate what you and I discussed in your office, which is that for the last 6 months of the first Trump administration, CDFIs reported into me. They exist because there are geographies in our country where there are unbanked and underbanked people, largely rural areas where the infrastructure costs do not merit the creation of standalone branches. And so I commit to you that we will continue to invest.
I would argue that it is not simply rural, but
predominantly rural.
We can litigate that another time. I just have to tell you, and this is, some who are talking about, on the tax debate, current law versus current policy. I believe if any business entity said, well, we're going to presume that we didn't have to pay for the cost of production increases because that's our current policy, even though those policies are supposed to end at a certain point, and you operated on those financial premises rather than the current law, I think the Donald Trump, the TV host, would say, you're fired, because the idea that you're going to somehow cover up $4+ trillion of tax cuts and not count it is the kind of accounting that I hope we were going to get away from at a debt that's now at $36 trillion. I think it is grossly fiscally irresponsible, and I hope and pray that you and my colleagues on the other side, that we can have a robust discussion on that. Thank you, Mr. Chairman.
Thank you, Senator Warner. And I will just say there's a big difference between saying you won't pay for something and saying you won't raise $4 trillion of taxes on people.
Mr. Chairman, as we all know, we spent a lot of time on these subjects, and this is the kind of congressional don't look here while we take your money there. And just because a tax cut is put in place or a spending program is put in place, the notion that we're going to count that forever, I think, is fiscally irresponsible. We're going to have that discussion.
Yes, we will. Senator Cassidy, you're next.
Hey, sir, thank you for being here. I really enjoyed our conversation. It was really good. And I want to follow up on this. President Trump has said he wants a balanced budget. Treasury Secretary Bessent has said that he wants a debt-to-GDP ratio of 3%. And I just applaud that, because as we know, home mortgages, student loan debt, credit card debt, student car financing is all related to the underlying mortgage rate, underlying Treasury rate, and increased debt can push that up. And if we allow that Treasury rate to rise, and mortgage and car and credit card and student loan debt rates rise, that is a backdoor tax on middle America. My people would be paying more, and home ownership is just a little bit out. So when the president spoke the other night of restoring the American dream, I just really saw that. Now, so that leads me to the question. And knowing that mortgage rates recently hit a 25-year high, what would be, and knowing our fiscal trajectory, because you've written a lot on this, what are the implications if our debt continues to rise upon those mortgage, car, student loan, and credit card rates?
Thank you, Senator. I enjoyed our thorough discussion earlier this week. If you look at the impact of the affordability crisis on the American people over the last 4 years, the inflation numbers really understate the impact because the impact of higher mortgage rates are not included in the inflation calculation. If you were actually included, the numbers are about twice as bad as the reported statistics. And that's exactly for the mechanism that you described, is that the higher interest rates that we're paying on government debt, those are the rates that are the base rate when you set mortgage rates and when you set other consumer credit rates. That's why the Secretary has talked very much about getting our deficits down, because he sees himself, he has described himself as the world's largest bond salesman, and he's the one that's responsible for making sure that we can continue to finance it. And as I've testified in front of Congress before, it's not just about the direct savings to the federal government from reducing interest costs. The larger piece is what you described. It's the pass-on rate to consumer credit rates that are a much more significant impact on family budgets.
So it's reasonable to say that under some scenarios that our national debt will rise from 36 trillion to 65 trillion over the next 10 years. Now, I'm not saying it's going to. We want to try to avoid that. But if it does do that, is it, as much as you can, what would you project would be the impact upon a mortgage rate, a car note rate, et cetera?
Yeah, so if debt levels were to rise at that pace, you would likely see 10-year rates, longer-term federal rates continue to rise well above the rates that most Americans have seen recently. That would push mortgage rates still higher. And as I think people know, one of the problems with mortgage rates so high is that people are now trapped in their current homes. They can't move elsewhere for a new job because they would have to sell their house, lose their mortgage rate because they can't take it with them. We have people trapped in their current economic situation because rates have gotten as high as they have. If these debt levels, as you've suggested, that have been projected were to be realized, we should expect mortgage rates, consumer credit rates to be even higher than they are today.
So then it's easy, put it this way, it's reasonable for me to say that your encouragement to Congress is that we look as to how we reduce that indebtedness as opposed to increase that indebtedness.
Yeah, and that's why the Secretary has called for us to put ourselves on a path to get down to 3% of GDP as a target deficit rate. That is a number that would be sustainable in terms of a debt to GDP ratio in the long term, is to have 3% deficits.
Real quickly, thank you for that. I was intrigued that you had previously served and issued the annual report on the Social Security Trustees report.
Yes.
The president has called for a sovereign wealth fund. He's talked about using oil and gas revenue to help pay for Social Security benefits. What do you think about the idea of having a sovereign wealth fund separate from the Social Security Trust Fund, separate, over here, with all risk borne by the fund, but use it, as other countries do, to invest in the broader economy to bail out social? Because we know that social is going insolvent in 8 years, at which point, by law, beneficiaries' benefits will decrease by 21 to 25%. Thoughts on that?
Yeah, so Senator, as you indicated, the president signed an executive order asking Treasury and Commerce to work together to generate a report with recommendations on the creation of a sovereign wealth fund. And as Secretary Bessent has described, what it would do is help us recognize the assets of the federal government and the ability of potentially better utilizing those assets to contribute to solving our nation's fiscal situation.
And what about dedicating those to bailing out social? Because right now, social is going insolvent in 8 years.
I mean, ultimately, it would be the determination of Congress as to how those proceeds would be used.
Sounds great. Thank you.
Thank my colleague. Next is Senator Warnock, and then the very patient Senator Welsh, who's been here for everything. Senator Warnock.
Thank you very much, Ranking Member Wyden. Last week, House Republicans took the first steps to renew tax cuts for the ultra-wealthy. And based on their own budget, these tax cuts are going to cost Americans $1.5 trillion. According to the Treasury Department, the entire bottom half of working families, that's folks making less than $75,000 a year, will see less than 8% of the benefits. But they're going to be stuck with almost 100% of the burden to pay for these cuts, since Republicans in Congress are planning to gut programs like Medicaid, food assistance, Pell Grants, to afford their massive giveaway to the rich. Dr. Faulkender, I'm looking for a number. If Republicans slash up to $800 billion from Medicaid, as our own budget suggests, how many of the 70 million Americans on Medicaid will lose their health care coverage?
Thank you, Senator. Medicaid is not a program that's overseen by Treasury, and so I have not looked at the impacts. Not only that, I'm not familiar with any cuts to Medicaid.
Do you agree that we might want to know how many Americans would lose Medicaid with $800 billion slashed from Medicaid?
Okay. Again, Senator, I'm not familiar with cuts to Medicaid. What I am familiar with is that the Tax Cuts and Jobs Act actually increased the progressivity of the tax code. It increased the percentage of tax receipts paid by the top 1%.
So do you think that it's a good idea to take families off of Medicaid? And how many families are you comfortable with cutting off of Medicaid in order to get this tax cut for the richest of the rich? I'm asking you this because you're an advisor to the president.
Senator, I definitely think that having people find self-sufficiency and getting into jobs that allow them to have their employer provide health insurance to them is a much better outcome than having government provide it.
So you think Medicaid is a bad idea?
I think people realizing self-sufficiency and getting off of government dependency is a good thing.
Does that include the children who benefit?
I think children benefit when their parents are employed, yes.
Okay, so let me talk about something that you and I do agree on, and that is that our debt is too high.
Mm-hmm.
And even after taking away health care and education programs from families, which I think is a bad idea, and I'm not hardened by the fact that your answer to the millions of Americans who need Medicaid is that they ought to find some other path, regardless of their circumstances. I'm not hardened by that at all as an advisor to the president. But you and I do agree that our debt is too high, which adds to the burdens and the costs of ordinary Americans trying to afford a house, trying to afford a car, trying to make their lives work. Still, Republicans don't have a plan to pay for their partisan budget bill. I think that's a bad idea. So I'm worried that we're going to add to the federal debt. And thanks to these higher interest rates that we've already discussed in this hearing, that will result in runaway national debt. Our children today won't be able to afford a car or a mortgage years from now. As an alternative approach, in 2013, Congress, on a bipartisan basis, extended the Bush tax cuts for anyone except those making more than $400,000 a year. This decision made by Republicans and Democrats working together and finding compromise saved the Treasury $600 billion, helping to narrow the deficit. If confirmed, would you support a bipartisan compromise that cuts taxes for working families but not billionaires?
Senator, I would support making sure that America's small businesses don't see a tax increase, which is what would happen if we allowed the Tax Cuts and Jobs Act to expire.
Would you support a bipartisan compromise that cuts taxes for working families but not billionaires?
Senator, I would support full extension of the Tax Cuts and Jobs Act to ensure that America's families don't face a $1,700 tax increase.
Even though you like me, you're concerned about the debt, you would extend this tax cut to billionaires.
Senator, as the Secretary said when he went through his confirmation hearing, we have a spending problem, not a revenue problem. Revenues are coming in line with historical numbers. It's spending that has greatly exceeded the historical average.
I think that the folks who are losing their Medicaid right now, who are without health care, and who, as a result of that, might not be able to work, would disagree. Thank you so much.
Thank you, Senator.
Senator Welch.
Thank you very much, Mr. Chairman. Thank you, sir. You know, I'm getting increasingly concerned about where the economy is going. and there's a number of things that I think we can't ignore. The consumer confidence numbers are dramatically dipping, and obviously, as you know, our economy depends on consumer confidence, folks buying things because they think they'll be able to pay for them. Inflation is ramping up. It's not going down. Unemployment figures are going up, 244,000 jobless last month. And the payroll numbers, 77,000 private sector jobs, according to ADP. That's the worst number since well over a year ago. And these are all signals that I know people in your job pay an enormous amount of attention to. But I also think there's policies that are creating an enormous amount of anxiety, certainly in Vermont, and that's the tariffs, 25% tariffs with Canada as well as Mexico. Is there an apprehension on your part at all that these tariffs, which would mean in Vermont probably 25 to 40 cents a gallon higher in gasoline prices? We import a lot of our petroleum from Canada. We import a lot of our electricity from Canada with the Hydro-Quebec contract. Folks will see a higher electricity bill at the end of the month when they're trying to balance their checkbook. Home heating fuel, we get a lot of that from Canada, and that's true for New Hampshire as well. I mean, how is that not going to have a very, very punitive impact on the folks I represent in Vermont?
Senator, the president's economic plan includes unleashing American.
I want to interrupt. I just asked a very specific question. My costs go up for gasoline. My costs go up for electricity. My costs go up for home heating fuel. A Vermonter says, Peter, how are we going to handle this? This is not a good thing for us. And I'm asking you, how are we going to handle this? They don't want to hear about, quote, the president's economic plan. They want to know how they're going to pay their home heating bill.
Right, and the way that we're going to do that is to bring down energy prices by unleashing American energy, bring down the cost of food and clothing and other aspects that Vermonters and Americans rely upon by bringing down regulation.
Well, I'm all for dealing with regulation, but you could have regulation without higher tariffs, right?
And then on the tariffs, I think that the president's objective is to address longstanding inequities in our international trade practices.
I'm talking about Canada.
Right, but
I'm talking about Canada.
As the president has explained, the Canada tariffs are to get them to focus on the fentanyl crisis that has been causing deaths.
You know, I understand that in the southern border, we've got full cooperation with Canada. They hate fentanyl just as much as we hate fentanyl. So you're telling me that the president is willing to make Vermonters pay 40 cents a gallon more for gasoline, maybe 10 to 15% higher for electricity, and 10 to 15% higher for home heating fuel, for our maple sugar producers to pay 25% more for the equipment they use, that's okay with the president?
I think what the president's looking to do is to get the Canadians to do more to help us address the fentanyl crisis that cost 100,000 American lives.
You're talking about what the president's goal is. I'm asking you as an economist, okay? There is a price that Vermonters will pay with these increased tariffs on Canada. Is that right, or is that somehow magically wrong?
I think that to the extent that the promise of these tariffs will compel the Canadians to take greater effort to address their role in the fentanyl crisis, then the president would be willing to remove those tariffs in order to have extracted that assistance.
All right, I'll try to make this clear. Will a 25% increase in tariffs on those items I mentioned, home heating fuel, electricity, gasoline, mean that Vermonters pay more for home heating fuel, gasoline, and electricity?
Again, Senator, it depends upon whether the Canadians take the steps the president's looking for and whether those tariffs will remain in place.
But the tariffs are in place. I'm just asking whether those 25% tariffs will mean whatever reasons the president has for doing it. You know, Vermonters may accept that. But will Vermonters pay more as a result of those tariffs?
So, Senator, the economics on it are, it's split three ways. Some of it's going to show up in the currency, the exchange rate between the Canadian dollar and the U.S. dollar. Some of it will be absorbed by the Canadian producers, and then some of it may find its way into prices in a one-time adjustment.
So does that, I'm going to try to translate that, but I can't. Does that mean Vermonters are going to pay more or less?
It means that there could be a one-time adjustment in the price that's paid as if the tariffs were to remain in place permanently. But again, if the Canadian government were to make changes such that the president releases those tariffs, then you would not see it show up in prices.
Okay, I yield back. Thank you, Mr. Chairman.
Thank you very much. And Senator Welch, I noted that just with regard to your current line of questioning, I noted that there's been some announcement today from the administration, I believe Secretary Lutnick, that they are looking at adjusting those very tariffs you're talking about. But we'll see how this plays out. Mr. Faulkender, I had one more question for you, and Senator Wyden has another question. But I'm not going to ask mine because it was on the U.S., on the TCJA, and you answered that very well in your responses to some of the other questions to you, which I did appreciate your answers. And with that, Senator Wyden will get to be the wrap-up here.
Thank you, Mr. Chairman, and I'm going to be very brief. Here in this committee, we really face so often two lanes. One lane is the economic lane, and nearly always when I'm home and I have town meetings, the second word is bill. It might be medical bill, it might be grocery bill, it might be electric bill, but that's the number one kind of issue that people talk about in their kitchens and living rooms. The administration's tariff policy is going to raise an awful lot of bills on Americans, small businesses, consumers, people who are shopping, and it's going to cause more inflation. And today we asked you about it every which way, and I still didn't really get any kind of answers. And the chairman made a very legitimate point where he said, well, the administration's going to do something today. And they've been making tons of adjustments as this goes because this is such a flawed policy. It is really, and particularly in my part of the world where 1 out of 4 jobs depends on trade and the trade jobs pay better than the non-trade jobs, this is just really bad news. So I'm just telling you about that. Then my question. I asked you about the president's authority to impound congressionally authorized expenditures, because that is all about the power of the purse, Article 1. And you said to me when I asked you about it that you weren't a lawyer, so you didn't have a position on it. Well, I've got something from a Fox Business interview from a year ago when you were asked the same question, whether impounding funds, whether the president's empowering funds would be a bad thing. And on Fox Business, your response was, no, not at all. So I'm going to put this in the record. You, of course, have a chance to clean something up, but there seems to be a big difference between what you told us this morning about the president's power to impound funds and what you told Fox Business. So you can, you have a couple of days, as is the tradition, to make sure we know what your views are. But let me just tell you, I'm going to send you some additional questions in writing where I asked you about matters like having enough criminal investigators, because I think we're losing out on stopping some of the fraudsters, and I look forward to your response. Thank you, Mr. Chairman.
Thank you, Senator. And Mr. Faulkender, thank you again for appearing before us today. You are undoubtedly qualified to serve as the next Deputy Secretary of the Treasury, and I look forward to voting in favor of your nomination, and similarly urge all of my colleagues to do the same. With that, I remind my colleagues that the deadline for submitting any questions for the record is 5 p.m. on Monday, March 10th. And with that, the Finance Committee stands adjourned.